In today's video, I'm going to teach you how to adjust work in progress in QuickBooks. Work in progress, or WIP, is the temporary home for costs on jobs that aren't finished. It usually holds three things: labor, materials purchased for the job, and subcontractor costs. In QuickBooks Desktop, you'll track this through job costing. In QuickBooks Online, you'll use projects, and many teams also tag classes or locations. Getting WIP right matters because it feeds accurate per project profitability. Start by determining the adjustment you need. Review your current WIP balances in your reports. In QuickBooks Desktop, open reports, jobs, time and mileage, then job estimates versus actuals. In QuickBooks Online, go to projects and run the project profitability report. Compare actual costs incurred to what's already in WIP and decide whether WIP should increase or decrease. Next, open a journal entry. In QuickBooks Online, choose plus New Journal Entry. In QuickBooks Desktop, go to Company, make General Journal Entries. Enter the WIP adjustment carefully. To increase WIP, because more costs should be carried forward, debit your work in progress asset account and credit the related expense accounts for labor, materials, or subcontractors. To decrease WIP, do the reverse. Debit those expense accounts and credit the WIP asset. Use the proper accounting date for the period you are closing and add a clear memo such as WIP adjustment for project. Confirm you are posting to your designated WIP asset, not to inventory or revenue. If you track jobs at a detailed level, assign the journal lines to the job or project. In QuickBooks Online, tag the correct project or class. In QuickBooks Desktop, set the customer job on each line. This keeps the adjustment visible in job costing and project reports. Save the entry with Save and Close. QuickBooks updates the WIP asset and the affected expense accounts automatically. Verify the results. Rerun your job cost or project profitability report and confirm total WIP matches your expected balances. Make sure project expenses and revenue look right. If they don't, create an additional entry to fine-tune the numbers. Finally, reconcile the change with your financial statements. Confirm the WIP balance appears on the balance sheet and related expenses flow correctly to the profit and loss. Review the outcome against your company's WIP recognition policy and applicable accounting standards so